good afternoon or good evening, everyone. I'm here to give you an update on the Dugbe project, which is owned by Pasofino Gold as the 49% shareholder, and give you a snapshot of where we sit and where things are traveling. We're in Liberia. We have a project that's got 4 million ounces of resource, of which 3.3 is in the measured and indicated category, and of that 3.3, 2.9 million ounces runs at a grade of 1.58, which is an attractive grade for a West African open pit mining opportunity. 3 key points I just want to highlight at the beginning. An advanced project. We've been able to move this through to the end of the DFS. It's been completed this week as I speak. And we've been able to do that because over $100 million was spent in the project by by our predecessor and subsequently by about 20 million of our money. It's a large asset. I'm told that there's less than 5% of the mining companies in the world have a resource base of 4 million ounces. So it's a very attractive, large asset base. It gives a lot of opportunity. But equally importantly, we've got a 2,500 square kilometre part of Liberia under our license. That is a huge exploration potential, and we believe quite sincerely that there's more than one Dugbe project to be found. Our concept, of course, was to get into production as early as we could and use the production cash flow as a means by which we can do exploration later on in the greater hinterland. It's that 2,500 square kilometre package. We're in Liberia, and people may not be too familiar with Liberia. It happens to be celebrating its 200th anniversary of independence, if you like, this year. So you can tell it's been around for some time in terms of the history of the country, or the more recent history of the country. It's a small nation, 4.7 million people, predominantly one single religion, which makes life a little more comfortable. There was the hiccup in the late 1990s, which were the Diamond Wars, but since then it's been very calm, and it doesn't suffer from some of the challenges that I'm sure you know in West Africa exist for several of the companies mining in the area. We also have an agreed MDA with the government, a mineral development agreement, whereby we have a stability tax clause in place. They cannot change the tax for the next 15 years. We have an agreement that it is a 25% corporate rate of tax. We have an agreement that we pay a community development fund, all in place, and we're doing so. And more importantly, to give you an idea of Liberia, they've agreed that in the event, if gold was to fall to $1,500 an ounce, they will reduce the import value, or the import taxes, I beg your pardon, on the diesel coming into the country by 75%. And of course, I'm sure as most of you know, if you're running an open pit mine, diesel is about 50% of the open pit mining cost. So you can see they want this project to work. And we've been moving forward. We did a snapshot of it. Well, I've done that, and I'm not going to waste your time. We did a PEA earlier in June last year, and you can see what the numbers look like there at a $1,600 gold price. We've got an NPV of $825 million before tax, 34% IRR, 2.3-year payback, etc., etc. Very attractive. If you believe in gold, then this is a gold project you should be looking very seriously at. The feasibility study is now complete this week. I know what the numbers are. Obviously, I can't make it public because it's not in the public domain yet. But I can suffice to say that I'm particularly happy with the result we've got. I think everyone will be aware of the challenging numbers that exist, particularly in the capital markets at the moment, in terms of buying equipment. Steel price is up, transportation is up, shipping is in short supply, etc., etc. So to end up with the number we've ended up with makes us want to go forward, and it really is, for us, very satisfying. The DFS project, we had some wins as we went along. We get tighter slopes in the open pits. It's all open pittable. Stripping ratio of less than 41. We got some good gold recoveries running at about 85, 86%, and the opportunity of enhancing that with a little bit extra work as we go forward. And that depends on the gold price. We get a much better payback in terms of recovery if the gold price goes up quite naturally. We are looking to use gas as our supply for electricity, a gas turbine effectively, and that gives us a nice saving in terms of the cost per kilowatt hour. We're down to about 17 cents rather than the 20 cents that diesel would have used as a consequence, and of course it's ESG beneficial. So we're happy with the way it's going. We work with the environment. We deliberately chose SRK out of Cardiff to help us with the ESG, environmental, social and governance point of view, because everyone recognises that is really up there at the top of the agenda. And so we decided to go with a badge that we liked, a name that we liked, and a company that we could rely on and speak volumes off as well as they will of us. So a good environment. It's a small country, as I mentioned, 4.7 million people. Where we are is very lightly populated, so we've no major movement of villages, etc. There's one or two smaller outlying villages, but very, very small, so it's not a huge cost to us. And we're only, importantly, 70 kilometres from the port of Grenville. And for those of you who know Africa, if you're going to be in an African country, in my opinion, you want to be in an African country that has its own coastline, because it's just easier to manage the organisation of a mine, the import of equipment, and the running of the mine, because you're so close to your input and your imported material. And although the road from Grenville to Dugbe is not the best road in the world, it's not a paved highway all the way, there's 40 kilometres off it, but at least 70 kilometres you can get there and back in a day, and there's only one set of customs you have to go through. So as well as being a stable country, it's got its own coastline. It's got a very positive mining approach. They have ArcelorMittal there. They're spending about $500 million in updating their Buchanan project. We're pushing ahead with ours, and there's another gold mine called Liberty that's up and running. So the country is open for business, and that is a bonus when you're on our side of the wire in terms of getting things done. The Mineral Development Agreement I touched on. I mentioned the fixed tax, 10% free carry, typical West African. Talked about the fuel duty. The other important one I should have mentioned was that we are allowed to offset all capital expenditure from day one in this project until commercial production against our profits. And as a consequence, you can imagine the first 2 or 3 years we don't pay any tax, which for payback of the material is a great thing. There's a mineral resource. You can see it sitting in there. It's a nice grade, 41 stripping ratio. Does add sensibly to the economics of the project. There is plenty of upside in terms of exploration. We've obviously concentrated on what's known as the Dugbe project, but outside of that, we've identified an extension of the trend, the Sakor trend, and a license area we picked up at the beginning of last year called Bucon Jeddah, and we're looking to move that forward after we get this project done and dusted. And they're proximate to our resource. The nice thing about Bucon Jeddah, that previous slide, you may have noticed some free gold around. They are mining free gold in that area. We're not. We're just seeing finely grained material in our cores themselves. Capital structure, we've got 41 million shares out there. We are currently trading about $1.07 Canadian, which gives us a total capital of about 45 million. We have, $1.9, $2 million still in the bank. More than enough not only to finish the feasibility, it is finished, but to make sure that we've got some headroom for what will be coming next. We have engaged in a strategic process, and I think everyone can read into that, the usual jargon, what strategic process means. So we will have attention, and we do have attention on the project, and I think it's one that is worth their attention, because even at that valuation, which is just nuts, by comparison to our peer group, to be running at something like $20 an ounce is just crazy, when the bulk of the companies out there are running at $40 to $50 an ounce in the ground. And we've got, similar to the guy before me, we've got 70+% in the measured and indicated category. So, gentlemen, not only from a technical point of view, but from an investment point of view, this is a screaming buy. There's no other way to describe it. And we're obviously taking it through to where we are, and we'll see what happens next. But it's been a good run, good place to work, good fun to be here. So I've beaten the 10 minutes. Thank you very much. And if there's any questions, booth P5.